Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For general trading, www.stochasticmoney.com. For Elliott wave trading, www.24elliottwave.com. For advanced trading, www.dayprotraders.com. The title of the video is how to trade like a pro in 1 hour part 3. We recommend to trader to watch part 1, part 2, okay, before watching this. This will allow you to master, okay, how to trade like a pro in 1 hour. We are talking about, okay, the Elliott wave, a flat correction. The internal waves of the flat correction are 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. A very reliable, okay, Elliott wave pattern, a beautiful pattern that is formed after a strong bullish move or a strong bearish move. Very, very important. You want to know when and where, okay, does the pattern form. Traders use, candlestick pattern, they use Elliott wave pattern, they use a stochastic pattern, they use a chart pattern, they use Fibonacci pattern, but the most important thing when we are using a pattern, all right, we must, ladies and gentlemen, know when and where the pattern is formed. Otherwise, okay, you are not, okay, using the pattern efficiently. So if a pattern is formed at the wrong place, what do we need to do? We put a big question mark on it. We say, well, it wasn't a strong bullish move, it wasn't a stronger bearish move, but the pattern, okay, is formed, okay? So, okay, let's give it a chance following the trading drill, the setup, the signal, and a low-risk entry point without ignoring the trading triangle, the market first, the sector, before, okay, the individual financial instrument, the heart of the trading triangle, the market leaders, okay, the fundamentals, and economy news. All right, we want to trade like a pro, we must use the trading drill, and we must use the trading triangle. All right, the market is very, very smart nowadays because we have trading software, automated trading software that using okay, powerful algorithm, and human being find themselves in conflict with okay, the smartest software out there. So the days where traders were using technical trading anyhow are over. All right, you want to understand the patterns. You want to understand where and when the pattern will form and how the pattern form and the psychology of the market at that point in time when the market is formed. Go to www.youtube.com/24Elliott waves, okay, to check all our video about okay, the mind game of trading and also the flat correction. In this part of the video, we are using okay, Caterpillar stock, and we want to okay, polish, so to speak, all right, consolidate everything that we have learned in the first part and the second part of this video. This video is very important for traders that are following us, okay? Especially if you are TSTWS or S008 trader, all right? Or you are an advanced trader, okay? All right, looking at this Caterpillar stock, we are on the daily chart. Let me remove my volume bar here. Yes, I'll remove my volume bar, okay, to see the chart itself. You can see on this daily chart, I have my drawing on this chart because I use it for other things, okay? And we can see clearly on this daily chart, this is one exercise. I want you, if you want to demo trade this, okay, or put it on your watch list, okay, and see what's going to happen, okay? So we have talked about the theory. Now we want to go to the practical point of trading in real time, okay, the flat correction, okay? I have my line already on the chart. You can see here, if you follow me carefully, that the price went up So you see there was a consolidation. Remember, during the consolidation period, that's the time when the pension funds, the hedge funds, the big institution, the bank, the investment bank will buy. So they will give orders to their broker and say, we want you to buy Apple for us, okay, in this bracket of price, okay, between X and Y. And the brokers, okay, they're busy buying, okay, the stock. And then we see the first wave, second wave, third wave, fourth wave, fifth wave. Now, you can see that the stock went up from here and to here. But before that, you see there was this small consolidation here. Can you see? On the daily chart. For many days, the stock slowed down here. What was happening here? The smart money was buying Caterpillar stock. How do we know? Now it's going up. Displaying high, low, high, high. So, and you see it went up from here to here. So let's color this into orange again. So you may follow me carefully. What do I care about? Okay, I care about an orderly market. That's all we care about. Orderly market. All right. Orderly market. That's all we care about. Okay. That's why we are recording this video, so traders know how the market functions, and okay, so they can make excellent decisions. So price went up from here to here. Before that, somebody was loading it. Gently they load it, and then they expose themselves, and the price went up. Remember what has happened. The price went down in 3 more. So it went down from here, down, up, down. You remember the flat correction? 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. The formation of this pattern will take place after a strong bullish move. This is a very important condition that we want to check. That's why I'm recording this video now, so we can analyze everything carefully here, and you can also, okay, make a better decision. Okay, stay with me as we are doing this. So no. Okay. Price went down from here to here. Color it also here in orange. In 3 moves or 3 waves. 3 corrective waves. 1, 2, 3. After, you see, it was in a rising channel. The market pattern was what? A rising channel. Okay. They went down. 1, 2. Break below. Retest. Down. Okay. Now it's going up again. Let's see it. We don't want to lie to ourselves. 1, 2, 3. Yes or no? Okay, now it went up. 1, 2, 3. It's now a bit tricky. Yes or no? Okay. So we will use our Fibonacci extension tool, which I've already put on the chart. So the professional will highlight this level, color in turquoise, the 138% Fibonacci extension level. That's the spotlight that I put there. Look what's happened. Instead of the price, look here. Instead of the price going straight, you see here it went fast, isn't it? You see this candle. This is what I'm talking about. Okay, it went fast, and instead of hitting the 138 for one reason or another. This is what I want you to understand. You see the resistance here, the previous high here. Pay attention carefully because I want you to trade like a pro. All right. The green line, pay attention to the green line. This is this high here. So in 1, 2, 3, instead of going all the way up here, straight away to the 138, the price acknowledges this resistance here. A lot of at this point in time, which is normal, you can see my drawing here, I put 1, 2, 3, 4, 5. Yes or no? But the price did not do that. It went down 1, okay? And then the 2, and then continued to go up. What has happened, ladies and gentlemen, you will see that sometime. That's why when you are selling, you see now it went from A to B, 1, 2, 3, all right? And then went 1, 2, 3, when we were here. So, You can see my drawing here. I was expecting it. I was drawing this line when I was recording another video. So we were expecting it to come here before coming down in 5 move, okay? But because, remember what I said to you, the small money looking for a better resistance level. The better resistance level is the 138% Fibonacci extension level. So yes, there is a resistance here where I put the green line. 1, 2. But it didn't come down straight away. The smart money said the pattern will prefer it, all right, to sell here instead of here. Now, or the market sentiment has changed. So it went down, but did not display the 1, 2, 3, 4, 5 that we're expecting here. That's why we say to traders, do not use area wave like a size. Price went up from A to B, 1, 2, 3, 1, 2, 3. When it's coming down, it did not go down in 5 moves, okay, as we were expecting it. But remember that the pattern is not completed, didn't hit the 138%, which is the 138% Fibonacci extension level, which is the best place for us to be truly bearish. Now, doesn't mean that when it reaches the 138%, we sell anyhow. We'll use the trading drill as always. If you were using the TSCWS 08, you know that the signal has changed and you will come out, which is great. So prices are going down here, but as we see here, price return back above it and continue to move to the upside. According to my analysis, this move is a kind of a distortion here. The prior move, which is from here to here, the price was heading to this point, the 138. But for one reason, because these are area wave trader and pattern recognition software, they see the pattern 1, 2, 3, 1, 2, 3, sell. They sell. But now the price started going up, which means this move in this session, we may just cover it. Let's cover it like it did not happen. So what the price doing now, what is supposed to do here straight away from here all the way up here, that's what he's doing now here. So our expectation, remember our expectation is expectation, okay? So our expectation is that the price will now, normally, it should go straight. It should go straight to the 138, where we will look for opportunity to sell, and if we receive a sell signal, we'll take it. But you can see that it did add that in here because traders thought that the pattern is completed here, which is normal. There's a resistance here. People took profit, blah, 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 blah. But here it is again going up here. That's why I cover this session. Sometimes the Elliott wave pattern can be distorted and traders get confused. Because, why they get confused? Because one of the reasons is that they are using the Elliott wave like a size, or they are not paying attention to other market participants, or they are not using the trading triangle. Now, the stock that we are looking at is a Caterpillar stock listed on the Dow 30. So this stock did other thing where I cover it here. If I remove it, you see what it did. It went down, blah, blah, blah. Here it is again. You see that very often when a pattern is distorted. You can cover the part that you think it has been distorted, which I'm doing now. That's how I do. That's why I'm doing all the time. So I cover it. So here it is. If I can move this candle, I can place it here, which is bringing us somewhere here. So the pattern that has started 1, 2, 3, 1, 2, 3 is not completed here. We can bring our line here. So if the price hit the 138% Fibonacci extension level, at this point in time, which where I put in my spotlight now, we will look for opportunity to sell. So we will say that our flat correction has been distorted in this session due to different reasons. But if we come back to the 138% Fibonacci extension level, we will look for opportunity to sell. And if you receive a sell signal, we use the top-down trading method to sell it. So, game on. If the price hit the 138% level, we will say that the pattern is completed, and we will be expecting Caterpillar stock to come down in 5 move, or at least to come down. It makes sense? It makes sense? All right? Because I don't have enough room to draw my line, that's why I'm going like this. Okay, something like that. All right? So next week, because we're on a daily chart, we can highlight the high of this candle. All right? After the Independence Day, we highlight the high of this candle. I use green, okay. Use orange horizontal line. And also we will highlight the median line. If it's going to continue, it may pull back a bit to retest the median line, pull back, retest the median line, and then bring it to the 138% Fibonacci extension zone. So there is a high chance that this stock going to the mind of the smart money. The price can change direction here. But as I said to you, we will not violate the market pattern. All right. But if you receive a buy signal above the high or near the median line of this daily candle here, we will expect the price to reach the target of 138% Fibonacci extension level, which is at $112. If the price hit that level, well, we will switch into swing trading mode, even to day trading mode, all right? And if you receive a sell signal here, we will look for opportunity to sell. You see the challenge of using, okay, the flat correction. A pattern can be distorted, but traders that are more experienced will be able to recognize the pattern. How to recognize a distorted pattern is to know what has happened, what is taking place. Why the price went down here? There was a resistance here. Okay, that's fine. Now, the price going back above it. Why? Looks to me that the price you see how it was running fast. You see that very often, the last lap, we talk about it, the last lap, all right? So, if a pattern is about to be completed, the last lap, the last part of the pattern, if the market recognize the pattern, they will push the price very fast to hit the target. These are late, smart market participants. So they see the pattern is being formed. Now the pattern is going to be completed. It's going to hit the 138%. Now the notice is now that, okay, in fact, the price was heading to the 138%. You see this top candle. I won't be surprised if on Monday, the price gap to test this level. That will be perfectly normal. Okay? See now? It makes sense? It is also powerful. So if a pattern is distorted, we want to know why the pattern is distorted, why the price behaves the way it did, all right? We want to know why, and, okay, analyze what the price was doing before. Price was forming 1, 2, 3, 1, 2, 3. There were other blah, blah, blah here. So if you are here counting Elliott wave, you'll get a little bit confused if you do not know what is taking place here. So, hold on a second. You'll be thinking, what's going on here? 1, 2, 3, 1, 2, 3. So you'll be saying 1, 2, 3, 4, 5, 6, 7. What kind of pattern is this? All right. Okay? So you start thinking, what kind of pattern is this? But because this move, this session here, to a certain degree, it's a distortion. That's all we can say at this point in time. When we are analyzing the price, because the market is dynamic, We just keep eyes on the price and following the price. That's why when we were here, we draw this line 1, 2, 3, 4, 5 by caution, because we would prefer to sell at 138. If you were selling at this point in time, we need to be careful. Here it is, it went back a ball, returning to the 138% Fibonacci extension level. Remember that an Elliott wave pattern can be distorted, and we should be able to recognize the distortion. In the second part of this video, I want traders to understand something very important. This is about the market geometry. Alright? The projection of channels. See the first channel that we draw here? The price was in a rising channel. So I'm going to call out my first channel in green. Stay with me. If it's too complicated for you and you have any question, put it below and I will get back to you, okay? So we have the first channel. If the price come out of the first channel, what do? We project that channel to the direction of the price. So the projection will bring us here. Pay attention carefully. So that's our first channel. So price couldn't find support on the edge of the first channel. Talking about trading on the edge. We come after the second channel. What do we need to do? We project the second channel again. Bringing us here. Yes or no? So price came out, first channel, second channel, projection, third projection. One thing I want you to remember in the third part of this video, when you are using a flat correction, the price will come out of the first channel, and very often, ladies and gentlemen, very often, you want to pay attention to the end of the first part of the flat correction, which is the A for alpha, the A part of the flat correction, because we have A, B, C, 1, 2, 3, that's the A, B, C, okay, A, B, so we are waiting for the B to be completed at 138, and the C part of the flat correction is 1, 2, 3, 4, 5. The A part of the flat correction is 1, 2, 3. The B for Bravo part of the flat correction is 1, 2, 3. Okay, and the C part of the flat correction is 1, 2, 3, 4, 5. All right, we want to take advantage of the C part of the C for Charlie of the flat correction. If you are using the projection of the channel, which is the market geometry, you are likely to dictate, okay, the end of the A part of the correction. You can see that the A part of the A for alpha of the flat correction ended at the median line of the third channel. So first channel, the first green, second channel, this section, and the third channel. The blue line here is the median line of the third channel on the dots. If you are using a stochastic or any momentum oscillator, use the market geometry and the channel projection. 1 second, please, just to write something down for myself. Okay? The channel projection. We can extend these channels because the channels are market patterns, all right? We can extend them into the future, all right? We can extend this one also. This will allow us, okay, if you accept that, this will allow us to trade on the edge and to make excellent day trading and swing trading decision and take excellent signal on the edge of channels and trend lines. So we can combine the market geometry or the channel projection with the flat correction to determine the end of the B wave, or the C wave, and the A wave of the flat correction. You can see that the A wave of the flat correction has ended at the median line of the third channel. Now, as it starts going up here, 1, 2, 3, it has stopped on the edge of the first channel right here where I place my cursor. Right here. When he was pulling back, he pulled back again near. Okay, let's remove this line. when he was pulling back here from the edge of the first channel, he pulled back again near the median line. This is the median line. Let's extend it again. The median line of the third channel. Let's color it into pink so you can see it clearly on your chart. That's the median line of the third channel. So we went up to retest the edge of the first channel. You see, you can make excellent decision on the edge. 1 second, please. One second, please. All right. You retested the edge of the first channel. Pull back to the near the median line of the third channel. Rally up again, you see, on the edge of the third channel. If you accept that, somewhere here, which is also this previous high here. How the market is moving from A to B, respecting the channel, the trend lines, okay, and the resistance level. And from there, he pull back again near, you see, the median line. He acknowledges again here that resistance. Am I talking to myself? He acknowledges, you see how the price slowed down, acknowledging this resistance again. And from here, he break out. Now, we don't want to fall into the bullish trap because we know that there is, okay, a better resistance at 138% Fibonacci extension zone. So if we are buying here above the previous high, we don't want to fall into this bullish trap because this can be a false breakout. So if we are buying here, we will secure again and manage our trade carefully. All right, we can do other channel projection, but I don't want to confuse you by drawing too many lines. We can draw horizontal channels. You see this channel here, trader who visited our website, 24 Elliott wave, okay, the wave genius, part 1, part 2, check it out. We can project this channel into the future. You can see that, okay, it will help us, okay, to determine the best horizontal channels. This channel here, we can project it like we did with the green channel here. You project it, project it, project it. I don't want to do it now, okay? Now we have a breakout here. Will this be a valid breakout or a false breakout? But because we understand the flat correction allows us to filter out, okay, false breakout and false breakdown. All right? All right? Very powerful trading tool that the professionals are using all the time. So if we want to be bullish, we prefer the price to go above. If you want to be very, very bullish, all right, you can day trade this, buy it, but be careful, gently. You hit 138, come out, you want to buy again, allow it to break above it, retest it, and validate $112 level as a support level before you can buy again. As always, as you can see, we don't want to force the Elliott wave on the market. We are respecting the market pattern, the channels, and also, okay, the price structure itself, the resistance and the support level, going step by step, using the trading drill, the trading triangle, okay, without ignoring economy news, and the fundamentals. All right? So, the next meeting point, or the lieu de rendezvous, is right here at $112 level for this stock. It has been going on for some time, okay? So this pattern was not completed here. A bit of distortion here that we have covered, okay? Now, the pattern continuing, okay? And our expectation is that the price will go to a level of 112 levels. The turquoise horizontal line, which is the 138% Fibonacci extension levels. To summarize this video, now the next thing that we need to check, was this previous trend very bullish? Look at it. Was it very bullish? In my view, it was not very, very bullish. How do I know? Look at the candles here. Okay, a lot of bearish candles, There's only one bullish, proper bullish candle here. Now the next question is why he was not bullish. Now we have to go now and check at Google Finance, put in the epic CAT, Charlie Alpha Tango, at Google Finance. All right. Check the fundamental. What's going on with caterpillars? Check the Dow 30 itself, the Dow Jones Index itself, which represent, okay, the Dow 30, all right, the Dow Jones Index. See what's happening. Why the market was not very bullish, but we are seeing a kind of flat correction. So at this stage, because we didn't have a proper strong bullish move, we will put a bit of question mark. Remember what I said? A bit of question mark on this flat correction. When we are using the flat correction for day trading, swing trading, or investment purposes, we must not use it as a sign. As you can see, the pattern here has been distorted. We want to combine, okay, the flat correction in this third part with the market geometry using the channel projection to determine the end of the A, B, C waves of the flat corrections. As always, we will use, okay, the trading drill and the trading triangle. So next week, we will put Caterpillar on our watch list. For day trading purposes, we look for opportunity to buy above the high of this daily candle or near the median line if you pull back near the median line, and expect the price to go to the level of 112. I hope you have learned something from this video also, and we put it into use to make excellent trading decision. If you like this video, give us the thumbs up. If you dislike it, okay, mark it down. If you have any comment, put it below. Any question, put it below. And if you truly like it, share it on Google+, on Facebook, and also on Twitter. It is very important that we share this video with other traders so we may have an orderly market. Until the next time, enjoy yourself and be very happy. We are the TSTW at 24 traders. Speak to you soon. This is about how to trade like a pro in 1 hour, a part a tree.